Breakfast Club. My name is Darren Hancock, and here we are for Monday, the 8th of December, 2025. Oh, here's that for romantic music, hey? There we go. Live this morning. Here we are. We're up live running. Okay, good. So it looks like we're getting a breakout in this situation. I'd like to see this upside level get hit on the 1 minute. Don't forget, we still have that daily volume imbalance that's sitting way above us there. So I do like that, the 26,000 range. Oops, let me put that as a 1 minute. It's not really fair value yet anymore. It's an inversion. So that's the target right now. Box to box trade. I was kind of hoping we'd have sell side purge, but we don't. So okay. Who have we got sneaking in there? Somebody else is watching. They're not saying anything. Good morning, whoever you are. So I'd like to see it retest this here. Let's go higher there. We're just going to reach for this first liquidity pool right here. And I'm just going to be under the, they're looking for a retest here. I'll put 6 more there. And then I'm going to put my stop loss just below here. So here's the change in direction here. If we close below that, all I've got is this last up close candle. I want to see its midpoint, mean threshold right here hold. So I'm just sitting here below the bodies of it. I want to see that hold. Good morning, Hadi. All right, let's look at where we're at right now on the daily chart. So you guys get a feel for what we're looking for upside objectives today. So we got yesterday's high here. We have this and this and this to reach for. So we've got this little price imbalance or volume imbalance right here on the daily, and that's at 26,000. We also have this last one sitting way up here at 26,180. So let's make that the target today, but I think we're just going to reach for our premium array here first, and then we'll see if we get range extension from that. And as usual, I don't like all that waffling around there. If it's got intent to go higher, then it's got to go. See, if we're starting to drill through this, that's not what we want to see. That's going to take me out, so I'm going to close that out. I traded through the mean threshold of that candle, come back to it, look for a further run down. So we're probably looking for another run down into here. But I have to wait for market structure to shift first. And it's okay to be wrong. Like, that's a nice setup for a long. It didn't give it to us. It's telling me that it wants to go lower. So there's the retest of the BSI. Let's go short there. Might as well use the rules as they appear. So if we trade through that, then here's where I tell you, if it goes above it, you want to go higher. If it goes below it, you want to go lower. And if you just keep getting beat up in here, you can see how you just keep handing back money. Like this is a classic case of that now. See how we traded above it? Now we're going back higher again. So I'm closing that out. Won't let me close it out. So we'll wait for a structure shift now. Wolfie, good morning. Just missing your soothing voice. I used to listen to you every morning for a year. I've gradually found my independence, but trading is lonely. Yes. Good morning. The sultry voice in the morning. Good morning, Wolfie. Well, welcome back, my friend. I'm glad you found some independence. I'm glad it's working for you. It's a lonely world out there for sure. Come back, retest this BISI. Tells me it wants to go higher now. So if I stuck with my original rule of you stick your stop loss one tick below the breaker, I'd still be in this trade. Just so you know. Rules are rules for a reason, man. You got to follow them. You can't. That's just. I'm going to stick it right just below here. See how it tagged it, and then left. Oh, I thought it was going to tag it. Look at that. I said it was just below that candle. It still didn't tag it. So, had I left it alone, even with that little violation of the rule, I'd still be in this trade. These are things to learn, man. These are things for you guys to pick up on. Is when you start to modify your rules and change things around a little bit. There's the rejection block. You pay yourself a portion there, move to break even, and let the trade run. See, I've turned a losing trade into a winning trade had I just followed the rules and stayed in it and adopted the rules properly. But one is, for me, the conflicting rule for me is if we trade through the midpoint of that candle, then I'm on the wrong side of it anyway. And we've traded below this level, so I'm on the wrong side of it, so I'll wait. And I didn't see how that, and I got back in again short, and then it went in the direction we originally thought. So this is more stronger. We've got more upside on the daily for higher, so your higher time frame bias is longer. So that's all right, man. You just get back in sync with it. That's all. Get back in sync. I want to see us get on top of this, find some support, and look for that consequent encroachment of this BISI here now. That's your box to box, weathering through all this crap, and you're still going to get your box to box. There's the first level. Just shy of our second level scale out. So now if this breaks, then we look for range extension and continuation models. There, we're just shy of it here now. That would have been our target. Right there, done and dusted. So now I want to see if this rolls over here again, or if we see if we close straight in on all of this and then roll over, or we get a range continuation model. So you got to remember this BISI here now is quite large. So if you do retrace back in, you've got 3 levels of entry And you don't want to see this candle here get taken on the its midpoint. So that would have been a nice little trade had I just followed the rules and stayed one tick below the low. Or even if I just left that bloody thing alone, it would have been fine. But there is the biz, you guys. That's the business as it was when you get your head in the way of a setup. How's your weekend, you guys? Did you guys have a good weekend? Is everybody good? Everybody's healthy? Families are all good? How's everybody down there in Vancouver or in Toronto? Hadi, your family's all good, I hope? We've come back inside this Bissy here. We just hit the top of it. I spent all day yesterday working on the bot or on the indicator. I was chatting with AI all day from 4 o'clock in the morning till 4 in the afternoon. I was talking to the bot, talking to the AI, working on this thing taking shorts and longs. And that's what it's doing. It's plotting out premiums and discounts. And then it's giving me longs and shorts. It's got a few glitches in it still, so I'm still working on it. So I'm not giving it to anybody until I see that it's working the way I want it to work. Excellent. I'm doing really good. Morning, Hans. We're just testing this. So we've broken above the high. This is the graded response. This is the A level response. B level response is right here at the consequent encroachment of this Bissy. So this is an A level entry for a long. So you have a B level will come back and fill this SIBI. Just shy of it here. And then C is 75%. So if you broke that into quarters, 75% down here, you want to see a small portion stay open. And the D level trade is a fulfill, a retest of this old high here. There's your B level response. Now you want to see it leave from here, right? Now you see how these candles, that first one, you want to see that institutional order flow entry drill and then leave, right? It didn't. There's that consequent encroachment stuff I was telling you about, Hadi, when you go from discount to premium often you'll see this premium consequent encroachment get hit, and then there's a significant reversal, especially if we've been down here and we haven't had, let's say this, you didn't see this, it just went up through it, came back down, tagged it, hit that, then reversed. It tends to target that downside BISI again, or SIBI. So just keep your eye on that. That's what I was trying to point out to you last week. There's the retest of the order block. It's closed. There's 75%. So there's your C level trade. So as a graded response, our grades are going down. But off of this key level, I like to see a reversal occur at. I don't have anything significant for reversal, so you have to wait for market structure shift, because there's nothing in this range here that supports like a BISI SIBI box to box trade, like a take profit model 2. So you have to use like a take profit model 1 if it's above 50%, and it is. So you would have to back into that level and then start scaling out your trade. And then if it breaks through here, you want to use this breaker here as support to come lower. So there's your C level trade. It's hit this old high right here. Hasn't quite filled this in. And it's got to get out of here. So if we pull this one here, if this bot continues to kind of interfere with my I keep calling it a bot, but this see how the consequent encroachment, it goes up like array to like array, like to like, inside box to box trading. So you got some wicks above, some wicks below. So we're just going to kind of watch this right now, because I want to wait for the 9:30 open. I want to see if this pops through here. I still want to see these London lows get taken. On the daily, I've got an objective I want to reach for on the downside, and then see if I can find some stability at that and then reach higher. And the one in the London, or it actually sweeps quite low below London. So I want to see that get swept first, and then I want to see looking for a nice reversal on a 5 to 15 minute chart for a continuation to the upside. See, full fill, that's a D level response. Now, if it closes below that, you're on the wrong side of it. So if we get a D level passing grade, look at where this one ends, right in this consequent encroachment here, or the mean threshold of this order block. See how that becomes important? Same as this one was important, and I traded through it and got all skittish. If I actually take, I'm going to see if I took the whole body here, just out of curiosity. Yeah, see, it traded through it still anyway. Okay, don't feel so bad now. So there's the consequent encroachment. Hit it, D-level response, a little wick, can do some damage at an acceptable level. And now you want to see this climb out of here. So it's got it, for me, it's got to climb up above 819. Not just poke up into the rejection or into this mean threshold of this last up close candle. It's got to pop through that and use this as support to keep pushing for the rest of this higher. So when you see this reversal on this consequent encroachment hit, you want to say, all right, where's the next place that could resist it? And if it's really got intent to get down here, it should blow right through this. And then start taking downside or swing points like market structure shifts inside the next breakers eat through those and then start targeting the lower side. As you see, there's a BISI here, still not filled yet. So now I'm stuck on that guy at its mean threshold and this guy here. So that's where the fight is between, for me, between here and here. So then you start to say, which one is stronger? This one's holding price. As you can see, it's like a pinball, right? It's bouncing off of it. And this guy's going to say either nope, you get rejected. So this is giving me a short entry right now. So we'll see if this, my indicator's correct. We're through that level now. So that one's holding. That one broke. Consequent encroachment of this last down close candle's wick. Get down. So far, so good. Pay yourself a rejection block from there to there, where it gave you the signal. But we're just, I'm just testing it, so it's not. That's a sell right there, and it's back from box to box. You see that? See how you check inside this range? There is no box. There is nothing here. So you have to go back to the larger range, which is right here. So we went from box to box to box. See that? Right off that consequent encroachment. Came back up. Mean threshold holding price. Finally closed below it. Trade back into it. Went lower. Pay yourself at rejection block. Even took the low. And now we're coming back inside. So short run to here and your discount box. Box, 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 box. I want to see if it eats through this. Now that we've been back to this box again, let's see if it eats through this level and continues to push higher. So what does it have to do? It has to get through this breaker. This is the bull trap. Looks like we're lagging in the YouTube channel there. And these are correct, by the way. They just get broken. See how we got this little imbalance here? We traded through it, so it gives you the signal to go low. Then it traded back through it, so then you cancel your trade. And it doesn't interpret the bias. It doesn't have an upside objective. It just looks precisely for a reversal situation. And you still have to be on the ball when it gives you the signals to go. Breaker still holding price. The bull trap is still holding. You have an 11-second delay, hang. Nothing I can do about them this morning, Hans. Sorry about that, buddy. Equal lows here. Looking for this downside to get taken. I want to see it get down here. I want to see it hit this big sucker here on Friday. And then I'm looking for a reversal. And if we lose that, then everybody who wants those balances up top there, we may be looking for a Tuesday low and then a run higher. In that case, we would see I wouldn't want to see any more than that. You could see 728, 730, somewhere around there. There's key levels there to look for on your 734, yeah. That 704 yesterday was awesome. So put that in your notes, you guys, about the consequent encroachment of the SIBI. It is the most sensitive area of the BISIs and SIBIs. Now, if I see how we've included this one here, if I just went to here and just used the wick to wick with the pure. Look at that. See how it just sits perfectly? The bodies respect that. If you just use the pure Bissy there. If you use the additional parts that Michael likes to add to it, then you just popped up above it. There we go. We'll run through it there on the downside. So far, so good. Holding price. What a perfect entry right there. Short. $7.43, yeah. Yeah. You see it on the 4-hour, Hadi? So now I want to see this level right here. It'd have to be right here. This has got to give way. This is the lowest downside box to box. And this has been a really nice box to box hunt. So we went from box here, 1, 2, 3, 4, 5 rounds of boxing. All inside internal range liquidity hunting. Using this exact principles I've been teaching you guys forever. So let's just wait and see this. Looking for a range extension, and then where am I hunting next? And we are through. So now we'll watch for 30 seconds. Now what I'm interested in is right here. That get retested. If we close below here, well, that was quick. Right back to it. Wow, it literally went snap. And didn't quite give us the retest. So let's just wait and see if we get the retest. We've got the range extension. Now I want to see the continuation model. Now if we close back above, mind you, you have to include all of this. So if it closes back above here, then it's we're targeting that guy there. And we're 3 minutes away from probably not the best time to enter now. I'm like 2 minutes away from the market opening. That could just rifle right through us here. We've had a range extension. And we've traded through this one. Now stop loss is going to go right here because this might shoot back up. I want to see this get through here. See how we've closed above there? That tells me I'm on the wrong side of it. So I got to now just hug this all the way back to my open so I can close that out, or it's going to take me out there. See that? So now I'm expecting this to go higher because we've got the range extension. The continuation model didn't give us a continuation. We closed above it. That's my rule. You're out. If it comes back in, you can get your trade off at break even, which would have given me there. And then you move to the sidelines and wait. That's the fail safe. I Kind of chased it down. Had it just pulled my take profit right back up to the break even, that would have came down, broke me even, and then I can say, all right, now get back in sync with the market. It went down anyway. There you go. There's the open. So that would have been the first place to pay yourself at the first low. Look at that. Now, are we heading back to our run higher? So let's just wait for this opening volley to finish up. The 15-minute fair value gap. Let me see where we're at here. Got to get above that now, hey? Morning, Russell. We want to see a body close above 827. Then I'd like to see that consequent encroachment or this old high here get hit. On the 1 minute, we want to see a validation. In other words, we want to see a body close above here, and they're so close to the high already. We get a high above here, then we're looking for that graded response again, which is what you got right there. So let's put that at 1. Oops. There's a long. Yeah, it's a good one, Wolf. As soon as it takes that high, we wanted to see it come back to that candle there. It did right there perfectly. Now I want to see that keep climbing higher. Now stop loss is going to move to break even plus the cost of the trade. We'll let that go. Now we're looking for that 964 to just 26,000. That was the perfect spot looking for that when we were talking about looking for it right here. Look at that. That high was 820, and that's where it came back to, is 820, right on the money. Just going to move into profit and just see if we carry on from there. It was quick, yeah. That's the retest. You see that though? That's the BISI broken. Range extension continuation model is, it took me out there. Retest one more time. Continue to go higher. There's an imbalance there. If we take that imbalance, we're back inside. I don't know where we're going right now. And it's early on, so let's just wait and see what we get. Let me just turn off my indicator for a minute. change in direction. So we're back inside this range again now. If that closes there, we come back, fill that nice and perfect right there. Now you want to see it leave from here. Just exit. This whole candle coming back in, retesting stuff. The mean threshold of that candle, see how it's got an area of sensitivity there? It's got to leave from here. That's just getting too choppy for me, so I'm going to wait for... It's still inside the range. It still looks like it can go long. It's still fitting the criteria for a long. We've nibbled into this mean threshold 1, 2, 3 times, 4 times now. So, and they've got that imbalance. So I don't like the fact that we've chewed into that so many times. $6.50. Yeah, that's that London low I'm looking for. I'm looking for London lows at 7, and then I'm looking for down here at 640 or 742, 736. So this run on liquidity here. Still think that London low's got to get taken. We'll see. Quick run up, take people offside, and then that's the New York open. We take people offside and then drive it back down, run it across all the people who are going long here. And indicators 600. Yeah, well, there's a lot's got to happen, Kev, before it reaches 600. There's a lot of PD arrays that will break. Before we get down there. Like if we take this range out here and we get a market structure shift, holy crap, then 626 to 676. Oh yeah, and it's Christmas, don't forget. This is the time of miracles. Those who want to go short, you may have your miracle. Those who want to go long, you got grinched. See how we're broken through this imbalance downside? We haven't even come back and retested it yet, though. So this would be a swing high, break to the downside. Now I want to see if this whole box here goes. Not just that imbalance, because you have to include that whole thing in here, right? So it's bearish if we break market structure and then use these two levels right here as support. I guess I'd be into something like that. Midnight open. Keep your eyes on midnight open here. There's the retest of that level. Wicks do a little bit of damage. The bodies are respecting that imbalance right there. We've retested this. See if I eat through that. Watch midnight open. That's going to be a key level, I think. If we break through this, come back into midnight open and use it for going lower, Kevin, we may look at Kevin and go, what? How did you know it was going to get 600? It may just be like lightning. A lightning strike down there. See how we've hit the premium in this 15-minute range? We've gone from box to box. Discount, perfect. Well, actually not perfect. That's the consequent encroachment of that. Hit it. The consequent encroachment. Just wick through it, busted through the top of it. What was that? 5, 8. It literally hit the rejection block here. 858. And now we've got to change in direction. Retest. Go lower. Box to box. Or here, premium to discount. There's the discount one right there. Like to like array. You see that? So we've hit that. Now we're stuck inside this range. We want to see this one give way. Come back, find support at this one, and continue pushing lower for range extension continuation models. Somewhat of a slow grind, then all of a sudden 2 big displacement candles and we're there in everyone panic mode, then whip right back up. Yeah, I agree, Kevin. Stay on your toes. Just wait for this 10 o'clock to settle in. This would be a 9:10 turn. That'd be a 9:30. Market structure shift. If we're looking at my Tibbs model, 30.32. There's 32. 33 makes the change in the direction. Look at that. 30. Then 32 is right there. 21, change direction. 5. Look at this one here. 21. That Tibbs still hits perfectly after all this time. There's 32. There's 21. Anyway, good. It did it. Oh my God, did you guys catch that? Remember we were talking about that level? Broke through it right there, came back, validated, and left. There's your range extension model right there. I called it before it hit. I'm glad it hit right there. See how that one traded below right there? Closed below it, quickly came back up, hit it, range extend. That's the range extension model right there. Boom, done. Now we want to see a continuation model. We're going to watch this get taken, and then I'm looking for this down here again. Looking for that London lows to get taken. All the way back down to the next discount box right here. Look at that, right off that discount box. Filled it perfectly. Bye-bye. What a change in direction, eh? Range extension. We did not get a continuation. It literally ripped all the way back up into our range here. So now what I want to see is if we close above this level right here. I'm looking for a close. And then they got to get above that level, that close above here. And because it's so choppy, wait for something clean, you guys. See, they were closed above. So I want to see if we tag here. This is an internal range liquidity hunt. So first order block. You want to see a body get through here. If this runs back and eats through here again, you're into that consolidated type of market. It's not clean. So wait, watch that retest there and go higher. It's got to break through this little guy right here though. Then it hunts for this guy. Then it hunts for that guy. A little imbalance. Imbalances, keep your eyes on those. Again, not a tradable area just yet, so just kind of watch it. There's the retest we're looking for internal range liquidity. Now, if you're pulling your fib tool on that, I'm just using this as an example here. So you say to yourself, I want to see this trade above here, and it does. If it comes back and tests that, I'm looking for that to go long now. So this is your first presentation fair value gap on a 1 minute chart. So if we come back and retest this one more time, that's cool too. And then you want to say 50%, take half your trade off, move to break even, internal range liquidity. If we eat through this on the downside, then I'm stuck back in this. I want to see it get broken to the downside, find support, and then start looking for another range extension again. There, so that's where you want to see it stop and go long. So wait and see if that where that closes in the next 25 seconds. Where are you looking, Kev? Yeah, you've come back, retest that. You just see it rip. You want to see it leave from here, right? I see I got your rejection block here. Got your breaker. Breaker takes that low. And they want to just see it tear out of here now. So we closed again above, or opened above. Now you want to see this whole wick coming down in here. You don't want to see that. Mean threshold of that last down close candle. It's holding. So now my battle is between here and here. Those two candles. So watch how this is acting now. If it's strong, it'll start to react off of here and start going higher. If it's weak, it'll just see it come down and keep tagging on this, like drilling into it. Just imagine that's like a big treasure chest and you're trying to drill through it and get the treasure at the bottom. So that's the kind of reaction you want to see. So now I'm watching mean threshold to mean threshold, like to like. Now I want to see if this gets because we're just looking inside this range here, right? And it's all in this one big candle that creates the range, the swing high, the swing low. So you've only got you have no imbalances in here, so you have to use the candles, the highest bullish candle, the lowest bearish candle, and you'll see how its mean threshold holds and its mean threshold holds. And now we're stuck right in the middle of that range, and it happens to be right at the first presentation fair value gap. If you want to stay on the horse and looking for specific data points, that's where we're sitting now. So you want to see how it's drilling down into this again. That's showing me more weakness. And now we're starting to drill through that mean threshold with a little bit of wick. And we'll see where we close in the next 6 seconds below that inversion. And that first presentation. See, now we're below it. Now I'm looking for this mean threshold to get tagged and then go lower. Or maybe not. Maybe it's just going to keep going lower now. See how we drilled through that mean threshold there? Okay, man, a ripper. Kevin's looking for a ripper. So we're looking for 743 to 735. Oh yeah, not yet. There's the discount box. 743 to 735, 43 to 35, done and done. Now let's see if we can get through here. Remember, wanted those London lows taken today? Look at that. I have to admit, I wasn't expecting a big punch through this first, but it makes sense. That's the Judas swing for the morning. At the open, it runs back up. People keep looking for that high. They're all wanting to get new highs. Then it quickly runs it down through them, comes back into that bullish BISI, and then drives it straight through. And we got a nice big dive down. So no bodies through here yet. We'll just wait. This could be coming back to retest this low. And then get our continuation model. I do not want to see it starting to trade back through these two, this little SIBIs that we've got forming here. So institutional order flow entry drill. And then continue going lower. There's institutional order flow entry drill. Let's see this retest here. That'll put you right at consequent encroachment of this. And I want to see this portion stay open. We've got this consolidation. We have a fair value gap that forms below the consolidation and the institutional order flow entry drill for continuation. There's the full fill. If you're looking at this small little range right here, right there to there, we got just up at a 62%. And now I want to see the scut pulling down. If we close above here, then all I've got is this first presentation fair value gap to go box to box inside this range. So that I want to see stay open right there. Now that we've come back and retested this low and this breaker right here, I want to see that hold, roll over and keep coming lower here. And the level we're looking for up here was where was it? Let me see, it was 30, 34, something like that, wasn't it? Where do we hit? 21, 34. This is good so far. Keep coming. I'm looking for 27. Oh, it's already hit 27. All right. Now let's see if we see a reversal here or a continuation. So for me, it's got to break this to go higher. And right now we're hitting right at a level I wanted to see it get hit to, which is that consequent encroachment of that last wick, the big wick there after the imbalance at 727, 730. So now I want to see this go higher, and I want to see, but I can't inside this range. We've hit 62%, so I want to see that start creeping back through here, take this out, find some support, take the bull trap out, and then continue going higher. And that's it. Now the low has been taken. It's hit a level I want to see a reversal at. So Kevin, you want it to go lower? We've already hit our discount box, so that could be the plunge through, clear up this liquidity that's all been looking to go long. So I want to see it leave from here, go higher. But if we keep coming back and finding support off of that discount box, it's looking bearish. So I haven't got a bullish run yet. I'm just looking for a reversal at a key level. And you want that to get down to the 600s, Kevin. Let's see how we react here. But yes, I do think we dig deeper and get move up on up. We need deeper liquidity for bigger move up. If we lose this level, then Kevin, man, dude, I don't even know. Then I'm looking for 648, 650. That will be my next downside run for 650. How's that? Is that where you're looking? Around 650? 650 to 637. That will be my next downside objective. If I lose this here. So far this SIBI, we tried to trade back in it. We filled it. So the fair value gap here has been filled. We've reclaimed it multiple times right into its consequent encroachment. Let me just put that in here. And this old one back here that I was pointing out earlier, we wanted to see it break. It did. Now it's coming back to find support. So this should be technically a continuation model here now. So we should see that go lower from here. So if this does hold, then we're kind of bouncing back and forth between a higher time frame objective, that 27 level I was looking for here, and you want your confirmation is it's got to get above here and break this bull trap for me to go long. Otherwise, we're still bearish overall right here. That's giving me a bearish signal. Let's see how we react here. 650 is what I had initially, but saying could go as deep as 600 to 590, then it's deeper than I should dig at the lower levels. What are you seeing down in 600? Let me see here. Let me see. No, I see 511. Shitballs. I see 547. 547 and 484. That's where 489. That's where I'd be hunting for. And that's there. Those have already been tagged. So I want to see that daily order block that we've just ran through 2 days ago on Friday, I think it was. Thursday. I just want to see if that wick at 689 to its open at 650. That's pretty much all. And then the consequent encroachment is the line in the sand at 637. And if we lose that, then I'm looking for 570, 566. And then all the way back down into 492 to 481. Yeah, see, still bearish. 600 to 590, 600 to 590. I don't see a specific array there on a daily. 600 to 590. I say 604. See that bearish, still bearish overall? That's the continuation model right there. Now, is there something specific you're looking at there, Kevin, on that 600 to 659? Is there a specific order block, or is it just one of your levels that you've got as a level of sensitivity? All right, 10 o'clock it is. Let's see something going on here. This is either going to hold and we blow right back through here, or this continues to roll over and come lower. And remember, we're bearish signal here. Where's our friend Melody? I haven't seen Melody today. Where's your next downside objective there, Hadi? Or are you hoping for this as well, to see this hold? This is Friday's first presentation. Not sure. This one's been tagged already, but we have to get through 735 on a close. And see how we're hitting right at the bottom of that SIBI. So I want to see this close below here and start using this whole area, which is this first presentation as well, as support to continue coming lower. If this continues to hold price in that discount box and then start ripping it back through here, I want to see that break the upside before going long. See, it's still holding. We've got a wick through it again. So the fact that we've revisited it again, not a good sign for shorts. Oh, let's see if we get a body above here in that candle. That little breaker you got, well, it's not really, I guess if you look at that little swing point. Looking at this candle here now, I want to see a body get above it. Then I'm just hunting internal range liquidity right here. First presentations and is the target. We got to get a body above here though. And if you're pulling your fib tool on that, you're looking at that and saying, is that worthy of trading? There's 50%. So you'd have to be back at the below that 50% discount area to run that higher. Stop loss would be sitting below the one tick below that hole. Those three candles right there. So it's got to close above, come back through to the consequent encroachment or mean threshold of this, I should say, and then start targeting that upside objective. It's not there, so still bearish. We do have a little imbalance right here. See how we've taken a little swing point out? We got a little bearish broken, find support, looking for a long. In this range here, there's your premium box. You hit through your premium box, you come back to your premium box, and now you're looking for rejection block. The rules still apply, right? Even inside this messy thing you see right here. That is exactly swing taken, reversal, body trades through it. You come back inside it, you're long. You look for 50%, 62%, so on and so forth inside here. Look for your premium box. You hit through your premium box. Now looking for range extension and then a continuation. Range extension is come back, retest this. It does. Now you want to see that continuation. So you pay yourself at rejection block and you're looking for the old high. So watch this high here. If we take that high, your range extension is completed. Then what we want to see is a body close above here, and then we have our graded response, a retest of the old high, your ABCD entry that we talk about over here. We want to see that, and then the continuation heading for the next premium array above us. So rejection block, that's why you always pay yourself at rejection blocks. If it fails, at least that little range run that you had here, you got paid and you got paid. And the rule is, if you enter in on that and you hit the rejection block, you move your stop loss to break even plus the cost of the trade, and you pay yourself and you wait for your next objective. You would have got paid, and then your next objective wouldn't have got hit. It came back, took out your stop loss, and now you just sit back and wait. You hunted quick little internal range liquidity hunt using the rules and using the entries as we have showed you many times. So here's the change in direction. We have a high taken, change in direction. We're back inside this range. Here's our discount box. If we trade through that on the downside, we're looking for 50% of this, and then the rejection block or low. So we traded through it, back into it. Now you don't want to see it close above here. Otherwise, looking for that premium box here, all the way up to here. So we traded through here. So this is looking for a reversal now. And see how it's traded all the way back down inside this range and already hit our objective we'd be aiming for. So you have to ask yourself, it has to come all the way back up to here for a discount. And then you want to see that hold and come back through here. Otherwise, if it closes above this, then we're looking for these targets above us again. So all of this is our valid premium box from here to here. We traded through it. We traded back into it. Now I'm looking for, so if you're looking for your high, low, you're above, you're in a premium, you want to sell it at a discount. So as soon as you get to 50%, so we're just going to use the same rules again. I'm just going to show you how this take profit model 1 works. So that's your last line in the sand right there. If you trade above that, you're on the wrong side of this. Close your trade out. So there's your last entry scale in 1, 1, 2, 3. Now if it closes above that, get out. Let me just get this guy out of the way. Mean threshold, the last up close candle. It's already been hit, right? This retesting stuff. If it's hit it, you want to see it leave. This, I don't like seeing this. This is where it's getting choppy now, right? We're in this choppy stuff. So in order to stay on the horse, watch where it's going. Your stop loss will be sitting right there. It's already blowing through it. Direct run to your stop loss. So if it closes above, which it's already running higher, so we don't get our reversal here. It just ran straight through. Took the high from discount all the way back through the premium and then ran higher. So it's literally from box or from here, traded back into the box and then just started running higher, took out the high. Now do we come back and take out this discount here again? Or yeah, no bodies above here. Keep your eyes on that little level right there at 749. Yeah, there's no trade here at all. I'm just trying to stay on the horse. That's all. There's 749. That's the level there. And see how the body, we wicked all the way up to the high. Where you take your stop loss, the body is just closed above it as well, and then quickly ripped through. So right there, just that alone would have closed you out, but it ran straight for your stop loss. That's the idea of being inside chop, right? It's not clean price action. It's quickly running, clearing out liquidity. Our 49 level took that low out. So now we're back in chop again. I want to see if we close above this here again, or do we still close below here? We don't have a close there yet. 749. Just watch that and we'll see if we get a retest of this breaker that takes out this low. And that happens to be right at the 749 level. So we'll watch to see where it closes. See how the wick's just doing some damage. And this is about trying to stay on the horse. It's not about trying to find your entry at this point. Just reading where price is, where it's going, what key levels it's bouncing off of. Because when it cleans up and price action starts to act the way you want, you'll see some precision that will boggle your mind. So see how on the 15-minute chart, we have traded all the way through, right to the bottom of this one here. Then we finally ripped through all of these arrays. Then we come back up inside this candle, which is our breaker, our last down close. You call this one the last down close candle because this one's embedded inside here. So there's your breaker that takes out the high. We've come back to the breaker, and now we want to see it drop lower. We still got to get through this discount box. So we close below that level. We traded all the way back up into this one, that whole imbalance right here. You have to include them both, right? We traded below them, come back into them, pushing for rejection block. It's hit it. Now I'm looking for this to continue to extend down. If this just continues to chop away here, I'm looking for this to go bearish now. Here. If I get back through this, then you're back up into that whole chunk. So you're going discount premium boxes. And you see how choppy it is right now. So you don't even think about entering it. Just play with it. Just kind of stay on the horse. Practice your arrays. Watching its key levels and say, where do you want to find some sensitivity? Where do I want to see price reject off of and go lower? Getting a trade in now would be like trying to get a speedboat or a speeding bus that has not stopped. Yeah, that's right. Just another way of thinking about it. See that? Nice sensitivity here right now. You want to see this keep pushing through this to go lower. You're looking for precision data points. And if they're just keen, it just keeps running around on you. This is the kid doing donuts in the street and you're hanging out the window. And you're trying to get in the car, right? It just keeps coming around, taking you out, coming around, taking you out. Don't get in the donut ring. They're smoking tires. Just practice the arrays and just see if they hold. We're just practicing, just trying to read price action here. And if it helps your model, it helps your specific trade model, then great. That's our area that we're looking for sensitivity. There's the rejection block again, looking for continuation on the downside. Yeah, is everybody still on December contracts? Derek would know whether or not the open interest on that is shifting usually around the third week or so, isn't it? There's the low is taken now. Now I want to see a continuation here. That's the range extension model. Now I want to see the continuation. Keep coming lower. We got to get back into doing Bitcoin again. I was having fun with Bitcoin this weekend. I made a little smasher on Bitcoin this weekend. I traded it like 20 times or something like that. I had perfect little entries all weekend. It was nice. If you study your Bitcoin on, and I was on Coinbase Bitcoin, and it gave you some sweet little entries this weekend. There's the range extension and the continuation. I want to see it come back. Tag this fair value gap here. We're going to use this now as support now that we've traded below it, that whole area. I want to see it hold price now and continue pushing lower. So we could run all the way back up into here. If we start closing above this again, see how there's nothing. It's been worked so aggressively inside here. There's for me in this little range here, there's nothing to play with other than this breaker here. So and this last down close candle, close above that, high, open, mean threshold. You're between here and here. There's no box to box inside here to play with. That's when you know you're getting a choppy range, when there's no boxes to play with. There's just candles. We're above it. Now come back, find support at it. Now go higher. Inside this range here, look for 50%. There's a little tiny imbalance right here. Mean threshold. So you're going to see if you want it to build to go higher, those key levels have to hold. And you see how we rip through them all with one candle? Your ass is next. We're going lower. You start ripping through all three of them in one candle. And there's the third one. See if it closes below there, then you're looking for a run on this low again. That literally stops right on it. Tag this right there. Good. You're inside that little sucker right there. Now you want to see that roll over and come back lower. You will see some tight action. We turn should be always that it's trying. You look for rejection block. Look for a run on this low here now. So if you're looking for specific PD arrays, we're looking for the low right there. Then I'm looking for this wick. I'm looking for its 25%, it's 50%, 75%. So you take that wick and you want to see if that 50% or higher holds. There's the rejection. Here's 50%. See how you can tell as soon as that goes through 3 different arrays, retest, go lower. Now we're looking for that one, the low to get taken, and it's done. Stay on the horse, man. You'll see these specific arrays give way, and then that little call, go lower. So that low has been taken. Notice the bodies are still staying up here. I want to make sure we, now this wick, it looks interesting. We're still going lower. This has still got mean threshold has been hit again. See how we went through mean threshold, back to that level, rip through it, back into the mean threshold, go lower. So now I want to see this start digging deeper into this weekly. Is that a new week opening gap? Let me get that out of there. Looking for 700. Or right here, 704. 704 to 707. Next downside. So inside this range, we got no sibbies to hunt. If I pull this guy right here, so we've traded through it, back into it, ran lower, we're coming back into it again, right here. And we're going to retest it one more time at 732. We've already done it here. This would be nice to see this just kick right off of here and keep driving down. Now it's worked this level. We've come back inside, we've retested it, and we're going lower. Nice. Yeah, that's what we're looking for, to see when it's obviously making a big turn. So 684, 659, and 640 is the next downsides. There's the 704 right there. $683. 683 is next. 683 is right here. Put my little line on there. And then the next one after that, we're looking for $659-ish. There's 683, 659. Here's 659. Next one is 643. At 659, it's that consequent encroachment of the BISI on the 4-hour. That's if you're wondering what it is I'm looking for. So I'm looking for that 643-ish area next. So is a D. That's also the consequent encroachment or mean threshold right now of the 1-hour breaker. Last down close candle. Denied. No reversal for you. $604. Let's see, that's 648, 643. This is an internal range run. That's a long. my stop loss is going to go tight. I don't want to see it get through here. It's got to be precise right there. It's got to leave from there. Get up there. I don't want to see this now. I'll move that to break even. That's got to leave from here. For my liking, it's got to go. Otherwise, we'll just pay for our trade and move to the sidelines. There's 50%. Take one off. And move to break even. That's your internal range. We're using take profit model 1. And then all I'll do is just move my stop loss here to 62% once, or 50% once we hit 62. So close. I'll just let it sit right in here. So this is just an internal range of liquidity hunt. So that candle there, I want to see that hold support here now. Right there would be perfect if it just bounced off of it and kept going higher. There you go. There's 60%. So now I'm at 50. You'd scale out another one there if you had enough on. Now if it gets to 70, I'll move to 62. And we're just hunting internal range liquidity, that's all. So it hits that 62% and comes back and takes me out. That's a quick little run. So this is where you got to kind of chase your stop loss real quick. If it hits that 70% optimum trade entry reversal, and you've only got one left on there. Now I don't want to see that come back down to here again. So the rule is wait till it gets there, then you're going to move right. I'm going to go up underneath that 62% right there. There's 70%, so you move to 62. Now you wait for it to hit 75%, and then you're going to move. This is where you sit there and go, oh, you got to hold, get ready to hold it. Let go of your mouse. It comes to 62 again. It takes me out. I didn't quite get my 70. There you go. Just tag in that little imbalance right there. And is it going to hold? Is it going to take me out? I'm just sitting right on the bottom of it. Let's just put right there on the bottom of it. Come on, keep going higher. That's screwing around with precision points, hey? Just give me the 70 so I can move to 60 or 70% here. Hit the 75. Don't give me the reversal just yet. So you see how you scale yourself out? You would have been scaled out more there. There's the full fill of that again. Now, if that's precise, that should hold and keep going higher. Now I'm going to sit right there because I don't want to see that get retested now. Come on, give me the 70%. I'll say right there. out. Okay. So there's the little box up top, premium box. If you're going for a box to box trade, this is box to box. As soon as it breaks that high, pay yourself, move your break even, and now you're just going take profit model 2. So there's that internal range liquidity hunt, quick and down and dirty using take profit model 1. The Human Torch was denied a bank loan. I don't get that. Off-site meeting that I'm going to be too late. Q 740 might be longs. Otherwise, this is the heading to 600. Be careful. Keep a wide draw positions. Small as D says stay out on the horse. We haven't traded back below this level yet. And we have no BISI forming in here, so it's kind of a tricky situation to be in. That's why that internal range liquidity hunt, I tell you, that take profit model 1 is a great way to protect your ass on the way up. And if you're on the wrong side of this, and this does head for that 600 that Kevin's looking for, that's how you pay yourself and still be on the wrong side of the overall move. I'm watching EU and the market, and when they are in sync, EU bullish and markets bullish. That's a good sign. When they are in the opposite, it's been quite some time, I'm not in sync. So you see how that 75% or 70% that it hit off from trade entry reversal. Now I want to see if this holds here and rolls over and comes lower. Because there's nothing really. Oh yeah, there's that little guy there. Is that a down up close candle? What's the open and close on that? Open and close on this is open 74.25, close 74. Oh, it's the same candle. Never used a neutral candle before. Typically, you find the fair value gap, then you find the first candle, positive candle, bullish candle to the left of it. In this case, it's a neutral candle, so it just came all the way back to the neutral candle. I want to see that run through that 75% now. Give this a little kiss. Keep going higher. That order block there has now been validated, so I don't want to see the mean threshold of that get lost or taken. Just see that keep going. There's the retest. Keep coming up now. Typically tougher to trade. I'm going to listen to the orchestrate while I drive. Would like to see them be in sync as we get to the FOMC decision this week. Oh yeah, that's right, FOMC. We're through that level now. Immediate rebalance, retest. Okay, all these bodies, wicks are doing some damage here again, using this and this immediate rebalance. Quick rebalance here, using that level of support inside this range. Now I want to see if this order block holds price. You're way back inside 50% of this already. %. You just dipped into the discount portion. There's a little BISI right here. It's got to get back through that level or pop through here and start digging into this mean threshold of this order block and this SIBI again. If you want it to keep coming lower. So it's digging through that BISI now. No close below here yet. We're just tagging this SIBI one more time. Now, if this is really going to start getting some lift, it's got to start digging back through this imbalance up top here and get through this candle. I want to see this order block right here start to act as a support if we're going to go higher. And I want to see this either hold it and push it higher, or if we start to eat through this again, we're hunting for Kevin's 600s. The next objectives are down here. There's a whole bunch of them down here. 600, 630, 647. So you see how that little internal range liquidity that we hunted for, you grab it. Like, look at that. I just want you guys to see how important that take profit model 1 is. There's 70% optimum trade entry reversal. We talked about that on the way up. You get the 75, you would have fully milked all of that out of their internal range, and then it changes up on you. You immediate rebalance, trades through it, comes back inside it, wicks do a bit of damage, continue coming lower. We want to see if this box to box trade finishes. We've already hit it, the top of it here, and we're below 50%. Sorry. This is the range we're looking for. 50% is down here. So we have to take out the consequent encroachment of this. If we're looking at the larger range. If you're looking at the smaller range, we're already below 50%. But I like the larger range. Holds the SIBI that we're looking for. There's the 50, just shy of it. We're like a half a handle shy of it. I'm going to make sure I'm actually on there. There's 50. That's hit. We've hit the consequent encroachment of this discount box. Now I want to see if we can start eating through here and start using this candle as support. So I want to see a little market structure shift here inside the R down close candle, which is our little SIBI right here. Our discount box. If I can see it break through here on a close, come back, I want to see a range extension and then a continuation model. So we've had an internal range liquidity hunt model. Maximized your profits. We see a change in direction. If you understand this immediate rebalance idea, trades through it, back into it, discount, heading for a discount box down here. We're well inside that now. I like to see that just hold off right there off on that guy. We haven't swept this low, so this little imbalance you see right here. And yeah, you got to keep your eye on them. We're blowing through it. Then this candle to the left. Now I'm back inside this range hunting again. So watch to see where that closes now. Whether it closes above that or closes below it on a close right here. Retests this and goes higher, or just quickly runs back up. Doesn't really do any damage. We have to see it close above here and here. Those are my two objectives if I want to see that run deeper into that range. Otherwise, we're still got our downside objective here we're looking for. That looks like it's run 50% out already. Nope. Nope. See how we didn't close above it? We just wick through it, wick through it. So if we just come back up in here and give it a little tap, go lower, I'm all right with that. If not, just drive her down. We're inside the SIBI. Again, watch that level. Come all the way down to the rejection block here on the swing. We have not closed below this candle. We've got another little wick up in here. No change in direction just yet. We didn't quite hit 50% of that range. Remember I looked at that and didn't quite see it. 50's right there. Still no body above here. You see how these wicks can do some damage, hey? So just keep your eye on this area and then that candle. If we get above here and here, and I'm looking for a run back up in here. Nothing. Whilst we are watching this, we'll come back to this. So that's the key level I want to see right there, whether or not it breaks it. If it doesn't, we're still looking for more downside. Let's go over here and look for our friend Mr. Oil and see what he's up to. Mr. Oil. Key level, as soon as it trades below it, acts as a key level to go lower. Now I'm looking for this mean threshold right here. See if that breaks. We break that on the downside. I like this. It tells me it wants to roll over and start targeting this down here. I'd be looking for maybe down in here somewhere. Dunga 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 dung. Nice. I'd be targeting that area right there. No swing yet. Box. We're hitting a lot of 5-minute boxes here. The line in the sand is, I do not want to see it get up into here. This is the line in the sand. Line in the coconut. Whoops. We have a change in direction inside here. Looking for this box up here for 1 minute. Right there. So that's box to box trading. We've hit the box, hit the box. We're having a nice little boxing match right now. Bitcoin. Delete all my notes I was putting in here for my putting all these notes in for my algorithm to my AI to work with me. Look at that reversal here. Trades right back into it. Short. Box to box. Beautiful box to box trade right there. 92,000 all the way down to 89,700. That's a beautiful run right there. Holy shit balls, that got up to $17. That's awesome. Right on the top of that premium box right there. Right on the smack on the bottom of the box, not the top of the box. Hit it perfectly, reacted off of it, gap down. That'd be nice to see that shoot back up there one more time. Wow, that natural gas sure took a punch, hey? Right there, gap down through the discount box. Come back, use the discount box as support to go lower. That's a range extension, continuation model right there. Right down to the next box. If we eat through that one, we're going lower. We down in here. Gold. Look at that gold. Oof, how perfect is that? You need to see that one, you guys. Can you see that? Reversal pattern. Oh, I want you to see this. Because when you see price action as clean as what we're teaching you guys every morning, you'll see that it's a beautiful thing. The high on this candle right here is 2750. The close on this candle is 274.9. Opens, validates it. So we close below the BISI. Come back, enter into it, and short. Well, you would have been on a full-on dive. It would have come back, took you in instantly. Mind you, it's 15-minute chart. Within a few minutes, it would have taken you into your trade, and you would have put your stop loss above that imbalance right there. You have to include that little imbalance above you here. So you put your stop loss just above that, because those are your three entry levels. 1, 2, 3. You got level 1. Boom! And it just literally took off with your trade. There's no discount, so you look for a discount box. There's a small one right here. There's nothing, man. It's not, you don't see a discount box till down here. For all of this, the full discount box, there's a tiny one here. No, the biggest discount box is down here. So if you would have had the cojones to wait from there for your discount. Oh, there's one over here too. You would have ripped through, took that, looked for a retracement back into breakers, these breakers. Lowest down close candle swings. Take the breaker, move it out to the side like this. Right back to the consequent encroachment of that breaker. If you go wick to wick. If you just use, I like, you know me, I like the last candle and I like the body only. Consequent encroachment, look at that. Boom, hit it. Quick rundown, take out the lows, change in direction. trade back into it, run back up inside this range. That's your 62%. Pull your fib tool on this. I'm not kidding you guys. You see this thing. Oh, with just that little trade we took earlier, same kind of principle. Lows are taking, swing, change in direction, entry, 50%, pay yourself, move your stop loss to break even, take half your trade off, hit 62%. Now move all your just over paying your trade to 50%. So now you've got half your trade off, you've paid yourself, hit 62, take another 20% or 10% off, move your stop loss now to 50. If it hits 70%, you'd move to 60, optimum trade entry reversal. You got to change in direction right here after taking out some highs, trades back into it, stop loss is sitting here, and you start to head back down to discount box to box trade, hit the box to box trade, pay yourself, wait now for structure change or wait for the new reversal. So we've swept a low, change in direction. Now we're way up and too high into a premium here, so you got to wait. That's how that one works, and it works delicious in gold as well. I want to get over to here to banks because my buddy and I were having a friendly argument about banks and stuff, and you seem to have to understand all these fundamentals about banks and all that shit. You don't. You don't. I don't agree with you, Gary. I don't agree with you, man. And this shit works on all your stuff, even your banks. See how this break above old high? You break above it, you come back in, retest it. That's your graded response. That's a B level entry right there. Graded response. Go higher in piggies. That's pork. So it works in pork. Change in direction right here. Right there. Body trades below it. You trade back into it. Go lower. Takes the lows. Look for any break in structure. Here, this is a bull trap. Trade back up into the bull trap. We do not trade above it. You roll over. You keep coming lower. That's soybeans. Coffee's all choppy. Wheat. Now I want to see wheat hit here. And we've got overlapping arrays here. You got a Sibi and a Bissi. So you want to see that right there, hold price, and for wheat to roll over now. We've got premium and you've got a discount. You've traded above the premium. Oh, sorry, above this discount right here. You've traded through it. You didn't get a chance to come back into it. And we just went higher into the premium. So if this premium closes above 539, we're going higher. Run for the rejection block. If not, I want to see this hold price now come back and retest this little guy down here. Bonds. Does it work in a bond market, you say? Imbalance. You got this little low. Change in direction. Come back, retest it right there with precision. We run up into our premium box. Right there. You hit it. You went through it. We're looking for a continuation model now. And if it trades back through it, we're on the wrong side. It did not manifest. So you wait. You got nothing in here other than this imbalance right here, but that's just too choppy. Comes all the way back down to our weekly volume imbalance again, down here. Remember that little guy down there? Look at it. Look at it. Right there. Hit it perfect. Runs higher. Trades above it. Trades back into it. Runs higher. Takes out the equal highs. It works in government bonds as well. AGNC. Oh, keep going. This has been nice. These ETFs all paying well, except this real estate one, which is surprising. Canadian real estate's going down. American real estate going up. This is just insurance against residential mortgages. Does it work in crypto? Or sorry, in Forex market. High taken, change in direction, trade back into it, go lower. Trade through our discount box right here on the close, come back inside it, use it as support for range extension and continue, or for range extension. Range extends. Now you want to see continuation. Trades back into it one more time, continuation. Takes out all of this, change in direction, swept the lows, trades above it, comes back into it, range, you're back into internal range liquidity hunt. If it trades back through it, I'm looking for this for a run on the lows. It trades back through it, comes back up, raids the low right there, and then goes higher. It works in this stuff as well. It's 4 models. That's all you need to run both sides of the market. It's 4 models. Oh, meanwhile, let's go back here. I'll remember Euro because I'm coming to banks next. Look at this thing ripping through here. See that level we were looking for support? See how it found support at it and then kept going lower? That's the range extension and then continuation model. Extension, continuation. Delicious. We ain't done yet, says Kevin. I agree with you, man. I do agree. We're just looking. Where's next? 607, 604. Let's move my next little marker to 604-ish, 607. I'm going to put it to 604. I believe 604 is in the works. Meanwhile, let's go back over here because I want to prove to my buddy over there that this shit works on all your things. Yes, even on your banks, Gary. Even on your banks. So, change in direction. Right here. Body trades above it. We trade back inside it. Run up higher. Premium box. You hit the premium box. You trade through it. Range extension. So, we've traded it all the way up into this rejection block. You pay yourself at rejection blocks. If you don't get your range extension, you pay yourself at rejection blocks. You do. It trades all the way back down into this discount. Then runs back up and does a range extension. So what we're looking for is body to break this high on a close. And then I want to see this mean threshold hold price. And then that continue going higher. So I'm looking for a continuation model here. These were all marked out before. Look at this. Fair value gap, trades above it, comes back inside it, goes higher, takes out the premium box, trades through it, comes back into it, and goes higher. Bank of Nova Scotia. Does it work? Hells yeah. There's the imbalance, trade above it, come back inside the imbalance, go higher. Change in direction right here. You tag it, come back inside deeper into this range, tag this old high, order block, wait for a body to trade above it. It does, trades back into it, goes higher. That has nothing to do with all that other things you're talking about, man. There's the change in direction, trades above it, comes back inside it, runs higher. Takes out the premium array. Comes back, hits it, runs back up, clears it out one more time before coming lower, deeper into that range. We got that reversal or that premium level. Sorry, this busy kind of side right here. We've traded all the way back inside that, run higher. Body closes above that level, comes back, gives it a little kiss, and then runs higher, takes out the highs. That's Laurentian Bank. Look at Royal Bank. Jeepers, that's just climbing. So it works on all time frames, all asset classes, same thing. Forget all the fundamental stuff. I'm sure it has its place, but 4 simple models, man. 4 models. Here's your DAX. This is the German DAX now. Swept the lows, change in direction. Right here, you enter in long. You're back inside this range here. Take your fib tool. I've showed you on how many assets have we talked about already. You're catching it at a discount. So we're catching this right here is your perfect entry. Traded above it. 1, 2, 3 level entry. So this is that trade I just took with you. And we're on a 1 hour chart in a German indices. You enter in 1, 2, 3 scaled entries, 50%, pay yourself, take half your trade off, move to break even. Okay, so you just cost the trade. You hit 62%, move to 50. You hit 70% off from trade entry for reversal. You move to 60%, you scale out another portion there. Then it reverses, takes you out. You go, great. Now if we come back and revisit this thing, you can start this trade all over again. Wait for the body to trade above it. It does right here. There's the SIBI. Trades above it, comes back in, finds support. So 1, 2, you would have got second level. You wouldn't have got your third. You would have got your second. Run for the high. Pay yourself. Now we're targeting this premium array up here. Once we get a body above here, watch the mean threshold of that. So body trades back above it. Mean threshold. Trades through it. That would have freaked me out. But you put one, your stop loss is 1 tick below the low. So for me, my rule was I would have closed that out because it closed below and then went back up through it. So I would have been out there just because that's my rule. But your stop loss, 1 tick below there, you still would be in it. Run higher. There's the premium box. Hit. Box. To box. Done. German DAX. That was our upside objective a while ago. It's hit that already. So silver, let's have a look at silver. You've seen different commodities. You've seen different asset classes. You've seen bonds. You've seen stocks, banks, financials. You've seen it in all asset classes. This method works on all of them. ICT stuff. It's truly algorithmic, you guys. High taken. I don't see any reversal here except for right here. Body trades through it. You don't want to see it trade back through it. It does here and then runs to rejection block. Trades back through this. So now you want to see this hold. And we're starting targeting these wicks and this old low and this last down close candle's mean threshold. So it trades through it, comes back up, wicks do some damage, mean threshold right there. See how that supports price? We finally run the wicks out. See how that low level right there is still holding, no bodies break through it. We're on the down, or the discount portion of that consequent encroachment. Rolls over, finally takes that level. Hits the mean threshold, trades through it, comes back up into it again. Finally takes out the lows. Then we get a reversal right here, change in direction. Immediate rebalance right there. Body trades through it. That would have closed me out because stop loss would sit down here. That would have closed me out. I would have waited for market structure shift now. Market structure shift above this candle. It's the first immediate candle to the left of the imbalance, which is right here. Body trades through it, get back in sync with the market and go higher. Targeting that premium array. Hits it, consequent encroachment, pulls back into this little run here. Fair value gap holds price, runs the highs. That's silver. Anyway, meanwhile, we're back over here. Can you look at silver in the chart, please? Just had 420% on a closed position on that on Friday. You made 420% on silver? That's Friday. Took the highs. Pay yourself. Trades back through our premium level. Again, there's nothing in here that gives me a reversal. Oh, yeah, wait, right there. Little tiny imbalance. You see that? Let's take this one right here. This little imbalance right there. See how we trade through it, then through it, then through it? You got to wait for market structure shift. Or use the bigger one over here because you're buried inside here. There to there. Wait for it to trade through it. It does right here. Trades back into the consequent encroachment of it right there. Then finally takes the lows. So this one is buried inside this one, so keep the bigger one. It's easy to say after the fact, I know. Run these equal lows out. So this little fair value gap you got right here, now that these lows have been swept, think about the range that you're in. There's a little tiny imbalance right there, a little tiny one right there. So think about the range that you're in. So when you look at this one, you always have to say, look at that range. 50% is here. I would literally have to catch the discount down here. So this would have to go through here, which is already up in the premium range right here. So that SIBI encompasses a discount all the way up into a premium. So is it worth trading inside that range? You decide. You've got a breaker sitting right here. Is this breaker going to hold price? Because we've ran down and took out all these lows. So this breaker, you want to expect to see its mean threshold. This last one right here, its mean threshold hold price. Or if you're using both candles at the same time, their combined mean threshold. You don't want to see that get broken to the upside. You know me, it's the bull trap. I want to make sure that that bull trap supports price. So if this SIBI here, if I trade through that on a close, then I want to make sure that I get through the bull trap, because the SIBI and the bull trap are interconnected. So there's the decision of, you got to wait for that to break market structure. Use this as support and do your range extension model. We want a little continuation or extension, then we want a continuation model. So you want to see a fair value gap form above here and our graded response for continuation. And if you don't see that, then bull trap holds, mean threshold holds. We see it trade through this level. If we can trade back into that level, we're looking for continuation, like a range extension down here, and then a continuation all the way back into this imbalance that we had marked over here. This immediate rebalance. So I'll be targeting that. And remember, we can come all the way back up inside this box right here, because this is the retest box. So real quick would be like tag right here, this discount box, run through, close below here, and use this discount box as support for range extension, and then a continuation down into this discount here. That's what I'd be looking for silver. Again, breaks for me if we get above here and here, then we're looking for higher prices. We've already had our liquidity run above us, so we want to try and start targeting a discount portion in this larger range here. Does that make sense, Vital? $11 not kicking off the way you want it to. That is not doing what you want it to do, Russell, for 11 o'clock. That's way too much chop at 11. You wanted to see that break through this candle here to get moving to the upside. Thank you. This helps. You're welcome. $627. Well, that's literally sitting on that candle. What is that candle's high? 626.50. This candle's low is 627.50. We're one tick away from filling the discount box. Box to box. So you're just chopping around now. Is there any asset you guys want me to look at? That looks like everybody's bailing out of here now. It's too choppy. They don't want to play anymore. Anybody want me to look at anything specifically, an asset class you're interested in? I'm going to look for a setup for you. Anyone? Anyone? Nope. You might have to wait till after lunch now for a reversal. $633. Get below 633. Let's do a random one. Give me a random one. M-A-R-A. Let's do a random one, he says. M-A-R-A. M-A-R-A. This one right here, Mara Holdings. Is that what we look at? So let's just look at this reversal just so you can see our setup that we talk about. So I'm not going to form fit it. I'm just going to tell you exactly how we look at the reversal. And I'll analyze it right to the tick that we're interested in, and then we'll see how price acts around the stock. I have no idea who the hell it is, what it does. I don't care. I don't care at all. So let's just take these key levels right here, right there. So I'm looking for this range. Here's a market structure shift, right? So you're looking for this breaker that takes out its own high. The last down close candle, I'm looking for this up here, this imbalance, and I'm looking for this, which includes this imbalance and that imbalance. So you have to include them all together. Body trades through it. If we trade and we're right into this discount box here, right? We hold on that, and then all of a sudden we run all the way back up into the premium portion. So you go from box to box, then all of a sudden it rolls through the box. Now I want to see this trade up into this box, and I want to see it roll over and go lower. It doesn't. It kind of pulls back inside this range a bit more, and you have overlapping arrays, multiple overlapping arrays. If you pull your fib tool on this, you'll see that if that level right there, because I want you to see where it fails and where it doesn't fail, for my rules anyway. So this is swing reversal, and we haven't got anything that breaks this high. So if we're coming back inside this range, there's 50% right there. It hits it, goes into a little bit of a premium, but we don't really get a reversal here. I just want to see if this held price and it didn't. See how it closed just above it and then went higher? I came back into it. Then you go, okay, it's going to go higher. Target 50% of the range. So even here, closed above. That's my, it's coming back into this range. Didn't hit 50% yet. So it trades into this area you want to see hold price. And then you go, now I want to go long on this. Pay yourself at the high. Pay yourself at 50%. Then 62. Well, you don't get to 62. You get to 50. You move to break even. You pay yourself, even though we're on, eventually and we don't see this. This is like if it was sitting right like that, right there. So we say we've closed above it right there. And I say, I want to, if it trades back into it again, I'm going to get long and I'm going to aim for 50%, 62% of this range or the premium box, which is obviously just above here. So then you go one click. That's our candle. It comes into our level, gives us our entry, and then runs higher. 50%, pay yourself, move to break even. That's the discipline you have to have. Then all of a sudden it trades back through it again on the downside. And I go, good. If it can get through here, so now I move this one to here because this is our lowest down close SIBI. All the way up to that little, that's all that imbalance right there. We trade below it. Now if I can trade back into it, I'm looking for a range extension model, which is right here. We've extended the range. Okay. Now I'm looking for a range continuation model. I want to see us trade back into this candle and then go lower. Yep. You need one of those small ones? So then you see we've traded through it. You come back in, find your entry for your continuation. Then you want to see if this level here gets hit. It trades below it, comes back to it, hits it, and starts going lower. What are we aiming for? Our next downside SIBI. So we hit it, we trade through it, and now I'm looking for a retest of this and go lower. Retests it and goes lower. So does it work in MRA? MARA? Absolutely. And we knew nothing about that stock. Now, if you would have bought that back then and you saw this continuation model, you go, sweet, if it can come back into here, I'm going to layer my entries for a short here, here, and here. If it trades above it, there's my bull trap. I want to see if that bull trap closes above it. If I'll take a loss, then I'll get back in sync for another run back up into that premium box. And there's your continuation model. We have a reversal right here. There's a little tiny imbalance. We've traded above it right here. You need to see this. Okay. See that right there, that little imbalance? We trade above it. Right here, we open above it. We come back, we tag it. That's your entry 1, entry 2, entry 3. So your stacked long is right here. And we're just coming back inside this range, and I'm going from box, and I'm looking for my premium, which is right here. If you're doing a quick little liquidity hunt, you're doing take profit model 1. Take profit model 1 is enter in here, 50%, move to break even, pay yourself. 62%, move to 50, pay yourself. That's take profit model 1. And it would have come back and took you out right there. So you're done. Now you wait for market structure shift. Or a retest of a SIBI that's in a discount portion below 50%. So you run back into this one or this one. You don't get that one or that one. You get this little guy right here. So we want to see if a body closes above this level. The body does. Come back inside it. Now I want to see that run higher. Right inside here, right there, you catch it and you run higher, pay yourself at the premium box. Rejection block, pay yourself at rejection block. And then literally gaps down all the way back into here. So just following that rule and paying yourself inside there, you would have got paid up again. If you would have held that, running for the high, that's why I preached to you guys about paying yourself at rejection box, it would have come back down and swept you out. Because if you had one tick below that low, see that right there, it would have taken you out. If you would have just followed the rules on the way up, you would have paid yourself there. So now we wait for this level right here to get broken to the upside. It gets broken to the upside. I look for it to get retested, and then I look for the next high to get broken right there. Boop, pay yourself again. Trades all the way back down. This is the area you want to see hold price. It holds price, and now you want to see that continue going higher. So it's got to start breaking through here, get on top of that, and start running higher now. You do not want to see it break through here on a close. Yeah, I don't want to see this breaker here get taken out. So you want to see that get some support on that, because you're inside this small little range here now. Because there's nothing, there's no premium, there's no discount. Civvies and bissies, except for this guy right here. I want to see it climb up on top of that, and then take that mean threshold, keep going higher. Does that help, Russell? That's a dandy little stock at $10. You'd have made 10% on that several times. $10% is good to make on a little stock, and that's a 4-hour chart. Darren, would you like to look at Novo Nordics? Code is Novo B. Yeah, I'll look at that for you. Novo B, this class B right here. Is this the one you want me to look at, Hans? Is that the one? I hope it's the one. I'll click on it anyway, and then we'll give you a little feedback inside here. Let's start from up where we see a reversal. Here's our reversal. So we have to include all of this. Again, 4 models are all we're using to trade the market. Okay. So body trades below this level. Look inside the range that we're in. So mark out your premium and discount boxes. First one's here. Next one's here. See that? I'm marking this one out. And I'm marking this one out. Just so you don't think I'm form fitting over here. Okay, so you're looking for this box to get broken and then retested. Notice that it doesn't get retested. Okay, it doesn't. This is a good learning experience. It doesn't get retested. So to me, it's open still. It's ready. It's primed for a revisit later. And like I've explained to Hadi, I want you guys all to see this. If our discount box down here, look at the consequent encroachment. See how it holds price? And then remember I said, explained to you earlier today, go back through this, you'll hear me tell you about it. That discount box or the premium box's consequent encroachment, if it gets hit and we see a reversal like we were talking about this morning, where there was a premium one up here and we saw that consequent encroachment get hit, and I said, what if it reverses from here? This is what we typically want to see, especially if an area has been untested. This one didn't get tested, right? We hit consequent encroachment. This is just it in a reversal situation. Here's our change in direction. Traded above it, all the way back inside it. The wicks do a bit of damage. Stop loss will be sitting right down in here. You've got a bit of a squeeze. You come down. Now I'm hunting for this area that didn't get retested. Look at that. Run all the way back up, hit it, and then we get another change in direction here. Would have taken me out right there. If I was just going box to box, that would have been a trade And then I would have been like, now it closed above. So now you've got to give it the wiggle room. You'll hear me mention wiggle room, especially when there's a SIBI in that's connected to the BISI here. You got to give it some wiggle room. That's the wiggle room right to the edge right there. You see that full fill? Then you got to say, if it breaks this on the downside again, I want to see that get broken on the downside. Takes this SIBI out here, comes back up inside. I wanted to see it retest this. It didn't. So you got to wait for your discount box down here to get broken. So let's draw this out. This is a SIBI here and this SIBI. They're internally connected, right? So let's watch this one that we played off of earlier. Let's extend this out because this is the one I want to play off of now for my next model. This is an internal range liquidity hunt. Take profit model 2. On the way up, you paid yourself on take profit model 2. You wait now. We didn't get our entry here, so we'll wait for our discount to break. No, see how it comes all the way down to it? Let me draw this out. It didn't. It hit it again and ran back up inside this range. And then I don't know. I'm not really eyeing anything over here where it's aiming for. So I want to see this break. So watch. I extend this out. See how we trade below it? I want to use this. This is my range extension model. Range extension. There's the range. Extended already. Now the continuation model is trade back into this. And the breaker, or the breaker, trades back into it right there. It's mean threshold. I want you to see this. My idea of a mean threshold is this guy right there to there. And just so you can see what I mean by mean threshold. Equilibrium. Right there. Hits it, rejects off of it, and goes lower. Okay, so now we look for our continuation model. And here's our continuation. Change in direction. Rejection block. You don't even get a chance to get in on this. It just literally runs right to the rejection block, takes the high. I'm looking for this level right here and this level right here. So start drawing them out. And you got to ask yourself, are they, look at that. These guys are literally overlapping each other from here all the way up to here. Do you want to trade inside that? See how they're overlapping? I'll try and give it a different color for you guys. Okay, so there's the top of it, and there's the bottom. They're overlapping, premium discount. So if you pull in your fib tool, when you get this overlap like this, use your fib tool to get more clarity on your range. So you just take your fib tool, pull it out, go fib retracement. Let's make this a little bigger so you get an idea of where everything is, right? So if that's my premium high, my premium, that's really the working range I want to play inside, right? So I'm in a discount down here. So anything below that point there is discount for me. So this discount array and this premium BISI doesn't get premium for me until we get above that area there. So that's the box I'm really working in for a premium side there. And this is the box I'm looking for discount side right there. Those are the ranges I look at. That's how I split it up. So you use this discount and that portion of the premium. So I'll probably use this little piece in here. Does that make sense? And it's a dog's breakfast in there, obviously, right? But look at the precise level. See how the bodies respect these levels? Mean threshold. Look at that mean threshold, still holding price. Wait for this to get taken on the downside. It does, and gives you a straight range extension continuation model all in one candle. When it runs like that and you're not on it, you're not on it. You're not on it. But you see how it trades below the premium? Then we say if it comes back into that premium and retests it, I want to get short and I want to aim for the bottom of this here. It literally took you down. So it's a more advanced way of breaking these sections up into premium and discounts and where to draw the line when they overlap like that. That's how I do it. So it ran through it. So now you've got to say, did it trade above it again? Right? It does. Does it retest it? Yep. Does it run higher? Yes, it does. So there's the retest and go higher. See how we're using just premium and discounts now instead of actual fair value gaps? If you did use your actual fair value gap, in this case here, it still works. Oops. Let's take that one there inside this small little range right here. And this one inside here and there. See, we have a swing low, we have a SIBI. We trade above the SIBI. Now we're saying, as long as it doesn't take out the candle to the left, you hear me say this candle to the left thing all the time. As long as it doesn't take out the candle to the left on a close, I can still use this SIBI to go long. And you also have to take into consideration, am I getting it at a discount or a premium? So again, where's the discount? The discount of this whole range is right here. So if you took our boxes that we did up here, because this thing is so big and it takes up a portion of the premium as well as the discount, there's where my entries have to be below that. So I'd have to get the lower portion of that. You don't. So see how it opened up here? We traded above it. So we opened above, come back, you've tested it, and now you go long for the premium box, which is up here. So you would have got long here, you pay yourself up at 1, 2, 3 levels, you scale out, and then it trades above and you go, now I want to see it go higher. And it goes gap, gap, and it gaps down. You go, no, I'm on the wrong side of it now. You wanted to see that go higher. It didn't. That was your range extension model that fails when we trade back through that level. It does get back in sync with it. Trades through it, hit your short here, and you're back inside the area that we didn't get a chance to revisit. So we're revisiting that. We come back up into that level one more time. And now we're going back down into the area that we didn't get a chance to tag before. So I'm expecting to see that get back down into here. Does that make sense, Hans? Got to run. Enjoyed that work on the Novo Nordisk. Applies everywhere, as you have said. Thank you. Talk to you later. Okay, you're welcome. See you later, Derek. B Master D. That's his name now, B Master D. Hans, thanks, Darren. See equal lows at 16436. 16436. Oh, you're looking way down here, hey? I have no idea where that is. What am I in? I'm in a 4 hour. Let me go to a daily. So if this is a daily chart, look for your setup here and the daily chart. See that right there? See how I've traded through it? If we come back and tag that again at 302, we also have a little imbalance right here. All this is a huge wiki imbalance stuff here, right? So look for this one here is actually buried inside this bigger one. I'm going to put this here and I'm going to leave that there just as a curiosity piece. And I like blue for daily. So ideally, because this one is lower and we close below it, I'd like to see that get retested and no more than this. But it can come all the way back up inside here. For me, for a range extension model on a daily, if you're looking for a run back down here, don't forget we have key levels we're looking for. So if this comes back in here tomorrow and retests this level, so you'd be looking for this at 301, 302, 302.45, and then I want you to start thinking, 304. Then I want you to think 306. Okay, and the wiggle room is, you see all that little imbalance right there? The wiggle room is all the way up to here at 309. So you're saying, well, how the hell am I going to catch that as a reversal on a daily? When you see these key levels, oh, my arm's cramping. If you see these key levels, all I'm doing here is just looking for the reversal. I'm looking for a reversal on the hourly, or I'm looking for a reversal on a 15-minute chart the moment it hits there. If it doesn't, then I'm looking there. If it's not there, I'll look there. And if it's not there, I'll look there. And if it's not there, I'll look there. And I'm just hunting for those reversals that are confirmed on the lower time frame that we've got a continuation down. Because if we don't, and we trade above that, then I'm looking for a long back up into this premium box way up here on the daily, right there. That's the premium, right? So that's what I want to see. I want to see this area here, hold price, roll over, and then I'm targeting right there, the rejection block. Then you take that wick and you split that wick into quarters. And you get your template, you go to quarters, and you say weakness is if we get, or strength is when it hits here and then starts to run back up again. So that's our 25%. Our 50%, you want to see that hold to go back up higher. And so in other words, I'm using these as scale out points, or I'm using them as support points to continue to carry my stop loss down, or scale out points on the way down if I'm targeting that level. If you've got a big, I want to hunt way down here for that low, and I want to stay in this for days and days, then you got to look for key levels to hold price. So our next spot's right there. You want to see that run down and see what kind of reaction. If you see a reversal happening right here, close your trade. So when you're looking on these higher time frames, you're just looking for key levels to look for a reversal. So like when we saw this coming up into here, let's look for a reversal inside this level right here and here. We're looking for a reversal here. So this is the second blue box above us. Let's slowly start eating our way down into this and see where we can see a reversal. So there's the 4 hour. I want to see this level get broken to the downside and traded back into it, right? Broken to the downside, but we never got a chance to trade back into it. So nothing on the 4 hour. It just kept going lower. And we're really between this level here and this guy right here in the 4 hour. Let's go down to a 1 hour. Looking for that box up there, right? So here's our mean threshold. There's a little imbalance right there. You see it? We want to see it trade through that little imbalance now. It hit it, trade through that imbalance, and I say if we can retest this little imbalance right here, I want to see it go lower from there. See how it closed below it? Comes back up, retests it. There's your short, and it actually sweeps some of this little high right here and goes lower. You may go, oh, you know what? I'm not happy until it breaks market structure. That's fine. Then you wait 4 more hours for it to break market structure here, come back into it. Now we're looking for a range extension model right here. Trades below it, right there, trades back into it right there, perfectly. We didn't get a body above, wick did some damage, still inside this breaker, and then rolled over, went lower. Market structure shift, body breaks through it, comes back into it, or market structure shift, or wait for this market structure shift, trades through it, trades back into it. Now I'm looking for this to go lower and dig deeper into here. So that's how we looked for a daily reversal, which was up here, and we're looking for an opportunity to start saying, I'm aiming for that daily downside objective. There's your hourly entry with almost laser precision. You're in for a short. So now that it's running down, the moment it breaks that low, move to break even so the trade doesn't cost you anything in case it rips back against you. You're in this for a long haul now, so just leave it on for the rest of the year and see if it pans out. If it doesn't, it comes back. You didn't lose anything. Each day, the cost of holding the trade, just keep moving it down so that you're covering the cost of holding the trade. So if it comes back against you, then give yourself a little pocket money for Christmas. So always be in a little bit of profit and make sure that you're holding that for your downside objective. Does that make sense? Does that make sense, Hans? I hope that helps. Hadi, you're long on this? Thanks, Darren. On the weekly chart. Oh, good for you. Thanks a lot for the help, Darren. Many Danish pension companies are in this stock. I'm not in it yet. Okay. In a long on ES or ES. Okay. ES, says Hadi. Ooh, what are you bouncing off of, Hadi? Oh, right here. Yeah. See how you're already through it again and you've retested it? I'm not even quite retested it. This mean threshold has to hold your price. I don't know where your fail-safe is, if you have a fail-safe, but right now it's traded back through there, so my fail-safe would be out. And that little attempt to get back would have been cutting back some of my losses. So I'd be still thinking this short, buddy. Be careful with that. You might be getting time and price. This might come back and just give you your mean threshold. If your stop loss is sitting way down here, how it typically would, if that fails, it should not trade back through that level, and it did. So now you're counting on this close. And see how it literally ran through this candle. It's open, it's high, it's open, and it's mean threshold all in one candle. Your ass is next. All in one candle. So if that goes higher, you know, you stick with your trade, Hadi, but I wouldn't be that's not following precise rules for me anyway. What is that? Is that the 15-minute chart? It looked good, then it looked bad. So if it breaks above, breaks below, move to the sidelines, wait for market structure shift. Or wait for a retest, a nice significant retest here, and then retouch and go, because this is a really nice range to run back inside. But you see how it's been balanced, comes back, it rebalances it constantly. Like it's got an intention to go lower. Yeah, I'm looking, if you're looking at NQ, sorry, ES, my next ES is 68.42. I'll put it out here for you so you can see where my levels are. That's the next downside box. And if you're looking for, where's our SIBI is right here. That's the next SIBI. 648. Oh, it hit 648. Perfect already. It hit 648. So it's hit this one here. So if we're sitting inside this box now, if I take 648, right there, and I go all the way down to there, that's the box. So you just bounced off of it. So always keep that in mind, Hadi. If you're looking at this thing and saying that candle there now has validated this candle as well as validated this reversal. We've had the violation all in one candle. It came back. Not only did it violate the SIBI, it violated 1, 2, 3 levels of trade all the way through it, right? So it drove all the way back to the 3 levels you're expecting to see price held at. Really strong would have been just come back and tag it and leave, right? But it didn't. It drove all the way through. It didn't close below the mean threshold, but it certainly drove all the way through to it. Now it's come back up. It hasn't even retested that. It just closed through that mean threshold again. So I think your ass is next. So be careful there, my friend. Oh, you're on long on a 5-minute chart. Okay, sorry. There I am talking all this up. Same thing on a 5-minute though. See how you've traded through it right here on a 5? You opened, you traded, you had one opportunity because we closed below it here. You had all these opportunities to unload your position because it's through it. It's using it now as support to go lower. Rejection blocks next. And if it turns around and goes higher, that is not a, for me, not an algorithmic thing that you could have predicted in any way. So emotionally, ones and zeros, Hadi. If this was a ones and zeros, just trading purely what I see from an algorithmic perspective, that's your entry. I like what you're thinking here, but there's your bull trap right there, right? And you're ask yourself, am I into the bull trap? I'm hitting it. This better hold, and it didn't. It closed right there. Opened, give you an opportunity to get your trade off. Went lower, gave you another opportunity to get your trade off. And then now we're heading for rejection block in the low. Does that make sense on the 5 minute now, Hadi? This is not being supported. Yeah. So if your stop loss is there, smart to get yourself out right there. You unload your position in a... So now I'm looking for this consequent encroachment now, Hadi. Watch that 68.40. And see if that 68.40 holds price, or we just start blowing right through it on the 1 hour chart. It's good. It was a nice attempt though, Hadi. I like the way you're looking at it going 11 o'clock. I bet you were thinking, ooh, 11 o'clock. This would be a nice time to get in on this one for an 11 o'clock reversal. So I love the way you're thinking, but just keep your eyes right there. That's my fail-safe rule. And that gives you an opportunity to unload your position because you're on the wrong side of it. Now, if it trades back through that, then you're saying, okay, now we're back in that chop again, above, below, above, below. You don't want to be in that. That makes sense. So again, you wait for, you're at lunchtime now, you move to the sidelines and wait till after lunch. Wait for something clean to hit. What's our next objective? Is right here. I do like this though. I like the way you're thinking though, Hadi. I bet you were thinking 11 o'clock, right? And you're thinking we have a market structure, or we have a change in direction, no market structure shift. So you'd have to not only get through this bull trap, you got to get through this one as well to get confirmation that you're going to go long. I wouldn't be long on this reversal until I see that one break on a 5 minute chart. Because there's no premium box in here in this small range, right? So all you've got is the bull candles to play with. Trap, trap. Get on top of it. Then you can start targeting up here. You got this one here that wasn't hit yet. So that could run all the way up into here. Hit this, reverse, and come back down again and never hit that. Anybody else want me to look at anything specific before I head out for the morning? It's been fun. I'll turn off my emotional light, my happy light. I got one of those sad lights. It's supposed to make you happy. Anybody else? Any stock or option or commodity or anything you want me to look at? By all means, pop it up there. I'll be happy to look at it for you. I'll give you a couple of minutes of that. I'm just going to kind of run back through these. So nice little Novo, change in direction. I like it. Just did a range extension, which is exactly what we're looking for. Range extension model. Done. Range continuation model now. I want to see this all the way up to here, hold price, and keep pushing lower. And then we know that fails because then we go to internal range of liquidity. You see how these models, they kind of dovetail one another. When one fails, the other one's kicking in to go back in the opposite direction. So for example, if this holds now, this becomes a fair value gap. After taking a low, what do we have? We have the reversal model, and here's our bull trap. If we trade through this one, come back, find support at it, we want to see the bull trap give way, find support at that. So we want to see a pop up above here, a nice graded response for a run back inside this range, 50%, 62%. What am I targeting for? That's my take profit model 1. Take profit model 2 is looking for this premium, and take profit model 3 is a different one altogether. So then we want to see that mean threshold break. Get up on top of that next bull trap and then start running. See how the models kind of overlap one another? There's the retest of the low. Roll over, come on down. Nobody else has any other one they want me to look at? All right. This is all shitville now. Stay out of that. There's no trades going on now. Rejection block's been hit. Premium held. Ran through discount extend. Bitcoin. We want to see this level right here give way. Break through this, find support at this, and then start targeting this down here. If this holds, then internal range of liquidity, I've got nothing for you really, except for if you trade back through it, find support at it, run higher, just use your fib tool to look for 50, 62%, target the first presentation, and start looking for up here. Oof, natural gas took a little high and then beat a drum and run. Run! There's our look at that retest, rejection block, change in direction, market struck, look for the order block to the left, comes back inside it. I want to see this hold all the way down into here. I want to see that hold and start pushing up into here now. I'm going to put my little box in here. Let's see if this gets tagged. What else have we got in here? Oh. Ooh, it's already hit this one here. We'll see if this rolls through. If we roll through here on the close, we're looking for lower prices. If we can get back through there on a close, then I'm looking for here. Rubbish, still no trade. IRL is all you really get. Okay, that's it for me, you guys. I hope you enjoyed yourself. I hope you got some fun out of that. And I hope you got to learn something. I hope it helps you guys understand a little bit more on price, and I hope it helps your model. And I love you guys. Thanks so much for your support. Hit the thumbs up, the like if you're new, and if you're old and you've been around a while, hit the thumbs up. It always helps out. I appreciate it. If you have any comments, leave them in the comment section below. I'm happy to answer any questions that you have. And hola, I'm glad it helps. Yeah, right back at you guys. I love you guys too. Thanks for everything, and I will see you guys bright and early tomorrow morning, and we'll see if we can find anything else to hopefully catch some of this run back. You know, if our friend Kevin is right, here's where my next little objective is, right here. I'm looking right there, so I'm looking for this guy. That's my next that's my next downside objective. See why, Hadi, you get out of that quick? It tells you you're on the wrong side. That's fine. You're on the wrong side. Get short now. Aim for that range extension model. Look for a retest of 8 or a test of 68.45. Then look for 68.40, 68.36. And then I guess this is the one we had originally marked off, didn't it? Booyah. This is the one we had marked off. So let's stay with that one. It's the bigger one, and all these are sitting inside that one. So we'll keep those going. Thank you. You're welcome. And I'll see you guys tomorrow. I'll be on Telegram there if I see something fun. We're just looking for a reversal now. If you haven't caught this nice big monster run down and enjoyed a nice little piece of pie here, if you weren't in on this, it's 6,800, 68.82s. Just wait for the reversal now. So anyway, I'll see you guys tomorrow.